Good afternoon, everybody. Dan Lopez here, your host of Lunch with Local Legends, episode number 11, still in the double digits. Just wanted to wish everybody a good afternoon. I'm here with my very special guest, Kevin Bordreaux. How you doing, Kevin?
I'm doing wonderful. How you doing today, Dan?
Fantastic. Kevin is a mortgage broker with Fairway Independent Mortgage Corporation.
It's a big, long name. We just call it Fairway. Keep it simple.
Simple. Nice. Very nice. And he's also the host of Coffee with Kevin. And he actually just finished up a show, so I'm glad that he was able to rush over here real quick and be able to meet with us still.
Thank you for letting me use your other meeting room. That came in handy because there's no way I could get here and do my show at the same time. So thank you.
I was going to make you out to be Superman, like you came all the way from your office and got here just in time. And
impossible.
Well, again, Kevin is a mortgage broker in the area. I've known him for, I don't know, how many years now.
6?
Yeah.
At least, no, because you did our house, and that was 5.5 years ago.
5.5
So it's probably about 7.
Wow.
It's been at least 7 since I knew you.
Holy mackerel. And we've done a couple of deals together, I think.
Couple.
Yeah. Kevin knows his stuff. He's very professional. How long have you been a mortgage broker, Kevin?
I got in the business in 2003.
Yeah.
Yep. So I went to school, got my master's degree in undergrad in speech pathology, and I worked with little kids in the school system for about 4.5 years.
Okay.
Realized might not have the patience for it. It's not something I love. It was great in college, though, Dan. I had 400 girls and 7 guys in my major.
Wow.
So I actually went to class. So I showed up. I did really well in school, got my master's, and got in the real world and realized, I don't know if I can see myself doing this for 40 years. Like, I'm a big believer in you got to be in a business or an industry that you're passionate about, that you're always wanting to learn and get better. And, with mortgages, there's thousands of loans I've done, and I still don't know everything, and I never will. The day I get to the point where I think I know everything is when I'm probably going to be on the decline.
I appreciate you saying that, because I was going to ask you, have you got it all figured out yet?
God, no. I ask a lot of questions and I double check myself a lot. And I do a lot of things in the process that makes the process go smoother, because it doesn't matter what your loan officer says. It matters what an underwriter is going to agree to and sign off on. So that's why we push the upfront underwriting up front, to just make the process go so much smoother for buyers. For the seller too, because if they pick your offer, they want to close on a certain date, a certain time, to get their money and to move on with their life. Right. And I'm a big believer on, and just unfortunately, a lot of lenders, especially the ones you find online and, in another state, I always recommend using a local lender, even if it's not myself, to get at least a second opinion. A couple reasons why: they know the local market. Their reputation is on the line when they're dealing with a real estate agent. So they're going to answer their call on a Saturday or a Sunday. If you need an updated approval letter and it's 9:00 on a Sunday morning, we're going to get it to you. Right. Because we know how important it is to get that deal under contract. We know how much hard work you put into the clients. And if we're not there to serve you, clients get frustrated. They may not buy, it's just a mess. And I believe that if you just do the work up front, do the underwriting, or have the documents reviewed, ask for everything, there's so much less that can go wrong with the deal, the transaction, and everybody can be high-fiving each other at closing versus, I got my house, God, give me my keys, I'm out of here. And that's, back when the market crashed, that's kind of when you're dealing with REOs and short sales. That's kind of how it was. People weren't excited to be at the closing celebration.
The whole celebration part of it went away.
It was gone for a couple years, but thank God it's back. And I just try to do my part as the money guy to make sure it's smooth and easy. And so no, I don't know everything. I wish I did. I wish I could download an app in my brain that just I knew everything about mortgages, but I know where to look, I know who to ask, and I know how to double check and get the underwriter to approve things up front if I have any questions.
Good answer. Very good answer. I just want to go quick hello to Christine O'Leary, to Chad Sorsey. How you doing, buddy? Jackie Berkson, Shane Spring, Anthony, Matt Porter, Michael, and Sean. Thank you very much for coming on.
I know about half of them. Hi, guys and ladies.
We got some real estate professionals on here, as well as some chamber people. So I really appreciate it. So you're talking about choosing a local lender rather than one that you might find online giving you some incredible rates. Can you give an example of something that might go wrong if you choose the wrong lender?
I'm sure you can give a couple horror stories.
One or two, yeah.
Well, I'll give you an example of someone that I talked to recently. We could talk for 2 hours on this, but let's just talk real quickly. I had a client that was using a lender that rhymes with Lickin'. So Lickin' Mortgages out of another state.
Who's that?
I don't know. They're a pretty big call center, basically. They're a call center that does mortgages. That's how I like to put it. They're order takers, one size fits all. You want fries with your mortgage? Do you want to supersize that? But they don't dig. They don't ask the right questions. So this client came to me upset because he was promised a great rate. Okay, everything online sounds good, right? The problem is he was paying $3,400 in extra fees to buy down that rate. So he really wasn't getting that rate.
Mm-hmm.
He was paying discount points and paying a lot of money out of his pocket that he didn't want to spend to get the rate that he thought he got. So it's about education. The online lenders are not going to educate buyers on multiple options.
Mm-hmm.
I like to show people, here's the rate if you're not buying it down. Here's the rate if you're paying 1% to buy it down. Here's the rate if you're paying 2% down.
Yeah.
And maybe you need a lender credit, which means you're going to pay a little higher rate, but the lender is going to give you money to offset your closing costs at closing.
Mm-hmm.
You could do any of those things, but it has an inverse relationship with your payment and your cost to close. So those are very important things that buyers need to know. How much is it going to cost me? How much is the payment going to go up or down? And does it make sense? Because if you're in the house 3 years, 4 years, 5 years, it probably doesn't make a lot of sense to buy down the rate because you don't see the benefit until you recoup the costs that it cost you. And usually it's somewhere between 3 and 5 years, depending on how many points, the purchase price, the loan amount, things like that, before you're ahead of it. So if you have a long-term perspective, if your buyer says, Dan, this is my forever home, and of course we never have a crystal ball, so we don't know if it is forever.
It could be, it might not be, you never know.
But if that's their intention, then yes, looking at buying down your rate makes a lot of sense to at least consider. So this client was getting a rate that he thought he was getting and he wasn't. And what was more frustrating is his loan estimate was all jacked up because they're in another state. His loan officer didn't know that the seller pays the doc stamps on the deed down here, the owner's title policy. They didn't understand how the escrows worked. So his loan estimate was so jacked up, it looked like a kindergartner did it. So he was confused.
Yeah.
And he needed someone that just could walk him through the process, tell him the truth, and lay it like, this is what it is. Here's your options. What do you want to do?
And you were the guy to do that.
Yep.
Outstanding. All right.
Well, that's part of the job I love. I love the education part. So, at least my master's degree in my first 4 years wasn't wasted because I learned how to educate and teach and get people to understand. Because sometimes when people come to me, they want a particular product or they think it's something, oh, I want this. But after doing my due diligence and digging, sometimes that's not the best option for them. Because I ask all the questions, and sometimes I like to show them other options and then, of course, tell them the pros and cons. Because there's no perfect mortgage, Orlando. There is no perfect conventional FHA, VA, USDA. They all have their pros and cons depending on your situation. So if anyone tells you this is what you have to do, run. Now, there's going to be a better option based on your credit score, how much money you have saved, payment, cash to close, things like that. There's going to be a best option usually once someone does their due diligence, a loan professional, but there's no perfect loan. There just isn't.
Looks like Jackie Stansel joined us and Candy Vargas. Welcome aboard. Thank you very much. And Jackie had something very nice to say about you, Kevin.
Thank you, Jackie.
That. So these online lenders, I think just about all of them, or the big ones anyway, they're quoting rates just about every state in the country, right? What's your coverage areas? What areas do you like to focus on?
Well, Fairway is in 50 states, but myself, we're not a federally chartered bank. So I'm only licensed in Florida.
Right.
So I can hit the keys to the panhandle and everything in between. Most of my business, I'm born and raised here in Central Florida. I'm a native with the last name Bordreaux. You're probably asking where that came from. And that came from my parents. We They grew up in Houma, Louisiana, outside of New Orleans. So that's where my family's from.
So who are you rooting for this Sunday?
Oh, the Saints. I know we're going to be against each other. I'm glad you guys won last week, and I'm sorry to see you guys going home after one win.
That might happen. We'll see, but I hope not.
It's going to be a good game. It should be a really good game.
You guys tore us up last time, but this might be our revenge. We'll see.
It's hard to beat a team 2 or 3 times in the same year, so it's hard. And you guys, but we are playing in the Dome.
Yes.
The Saints are playing at home, so I do think that's where, if we were playing in Philly, I would say, Dan, we're going to lose. We don't play well in cold weather. Anything under 40 degrees, I think we've won one game in the history of the Saints. They win in the Dome, but they don't win when it's cold somewhere else.
So,
that helps.
It helps for sure. Yeah. And we're getting off topic here a little bit. I apologize. I want to say hello to my dad, Angel Lopez. Thank you for
Angel.
So what areas would you say that you specialize? I know, you're licensed in the entire state and you feel comfortable with a multitude of different loan packages, but which ones would you define as your specialties?
Loan product wise?
Yes.
Okay. I'm a big advocate for VA financing. I love helping our veterans. The VA loan is the best loan in America, and more veterans should take advantage of this amazing benefit. There's no mortgage insurance. You're not required to put anything down. You can go over the maximum loan amount for VA and just put a small down payment. A lot of people don't realize that. I did one the other day. It was like $600,000, and the other lender was trying to get them to do a jumbo loan with 20% down and or 10% down with mortgage insurance. We did a VA loan. It was like 5% down, 4%, something like that. Yeah. So they saved a bunch of money. They didn't have the mortgage insurance, and it was just a better loan. VA loans allow for the highest debt ratio allowed as far as any other loan options. USDA is the strictest. So I love USDA, but because it's zero down as well, just like VA. But they have income limits. The house has to be in a USDA eligible zone, and the debt ratios are really tight. And it's household income. So even if I have someone that's not on the loan, or you have a 21-year-old son working full-time living in your home, it could disqualify you from using USDA. So VA is the most aggressive, the easiest to get underwritten. I know a lot of lenders say it takes 45 days to close a VA loan. I close them in 21 or less all day long. So it doesn't take any longer. And they're my favorite. I do a lot of conventional. A lot of my borrowers are move-up borrowers. So there's someone that's done it before. They're taking the equity that you helped create for them when you got them into their home. And we're trying to figure out a strategy to buy that next home and keep that payment within, what they wanted. Because right now, one of the biggest things I'm seeing why people aren't moving up is they have a 3.5% rate.
Yeah.
Rates are not 3.5% anymore.
Probably won't see that again in our lifetime, right?
Probably not. I mean, maybe. Who knows? We don't have crystal balls.
Sure.
But it's going to be a long time before something like that happens. And unfortunately, what would be a catalyst for seeing 3.5% rates again would be world economic collapse, which I don't think anybody wants to see. And that's why we'd be in the threes again. So I'm all about avoiding a 3% rate if we can keep the economic integrity of the world. So this is the question that everybody asks. And anytime you come across somebody, whether they're in the market to buy today or they're just curious about the real estate market, what are the rates today? And that's a loaded question because it depends on your program. It depends on your credit score. It depends on how much you're putting down. But we were trending up to sometimes 5.25 even sometimes, but we've come back down in December, which is nice. We're in the mid to high 4s depending on program. 4.5. I just locked one at 4.5. I've locked some at 4.75, 4.875. But again, it really depends on credit score, especially with conventional. With FHA and VA, which is the government loans, your score is dependent on credit, but it's not driven as with conventional loans. Every 20 points you're below 740, you're going to pay a little higher rate than that person with a 740 or above. So it can get pretty ugly pretty quick. I can do a conventional loan at 620, but the rate you're going to pay versus that person with a 740 is quite a bit different. That's why most of the time, if you're under, in the mid sixes or low sixes, FHA usually becomes the most viable option for someone like that.
Because FHA doesn't care about your credit score.
They do,
The
but they don't
but
hurt
FHA
you.
doesn't.
They don't hurt you as much in the risk-based pricing, because everything is risk-based pricing for the lenders. Everything's based on, again, the loan to value, the credit score. I mean, there's like 20 things that go into your rate. That's why when you sometimes call someone and say, what's your rate? But you don't take the time to talk a little bit with the loan officer, he's just throwing out a fake magical unicorn number. It's not real. You need to know that person's situation and what they're trying to accomplish. And then you can give them a real rate. Hey, today's rate is this based on your situation. Where was I going with that? I had a really good thought. I wanted to touch on.
While
it.
you're thinking about that, let me say a quick hello to Caleb Edwards. He has joined, and he had a very nice comment to say to both of us. Thank you very much, Caleb. And Barb Stewart has joined us, and Peter Hernandez. Thanks, guys. I really appreciate it. And did you collect your thought, or
no? What was the question?
Initially, it was what are today's
rates? Yeah. So it depends. And the thing that what I like to tell everyone is rates change daily. They can change for the better or worse. They don't usually go up or down too much intraday, but I've seen them go up a half a point in one day. Wow. I was in Miami, July 5th, 4th, about 5 years ago. Yeah. All hell broke loose in the bond market. And I was on vacation with family, looking at my computer going, oh my God, all those people I pre-approved. Yeah. So that doesn't happen often. I think it's happened maybe twice in the 17 years I've been doing this.
But it always could happen.
It can. Yes. And so my thing is, once you find a house, go ahead and lock in your rate. If you're comfortable with the payment, if you know what you're getting into.
What does it mean to lock in? Just in case somebody doesn't know what that means.
That means you give your loan officer permission to actually lock in your rate based on today's rate. So if rates get worse during the process for you, you do not have to take a higher rate. So it kind of protects you. You know what you're getting. There's no bait and switch later. You're locked in. You know what your payment is, and it's just a better way to do it. Some people like to float. Those are the gamblers. Those are the risky people. Yeah. Floating usually backfires from what I've seen over doing this 17 years. Unless all of a sudden we just, the economic news is getting really bad and people are getting scared and the bond market's doing well and everyone's getting out of stocks. Because when people get scared of the stock market crashing, they put their money into bonds, which actually helps interest rates decrease. So the more money that goes into bonds and more people buying bonds, the interest rates actually go down. So fear and greed and that kind of stuff sometimes plays into account. So the economic news can move the bond market pretty quickly. So your 401k might be a 201k, but your rate might drop down quite a bit.
So if you want to be a gambler, you might save a few bucks, but most of the time you wouldn't recommend it.
No, I don't.
And how long does the lock usually last then? I mean,
as long as you need it to. You're going to lock in usually for the term of the contract. Yeah. So if you come to me with a 30-day contract, we're going to lock in for 30 days. If you're locking in 45 days, 60 days, anything over like 90, there could be extra cost involved because the lender doesn't know what the rates are going to be. Rates could be much higher 90 days from now, and they're losing money. So if you're trying to lock in longer, but I don't know why a loan would take more than 30 to 45 days. Even a renovation loan usually takes 45 days. So I don't know why you'd want to lock that far in advance or take that long to close, basically.
Right. So VA is your favorite. I know you do FHAs as well, and obviously you do conventional products as well. Before we get into that, we got two Lisas who have joined us: Lisa Castro Poe and Lisa Cather. Thanks,
hi, Lisas.
Hi, Lisas. So FHA, VA. FHA is government insured. VA is government guaranteed. There's something going on with the government right now. They're kind of closed, right? Closed for business.
Non-essential personnel, I guess they call it.
Yes.
So my thing is, if they're not essential, why are they working anyways? But hey, that's a different topic and a different talk show. Right. But so how is that affecting you? Yes. If you're a buyer or a seller right now, how can this shutdown affect you? Well, number one reason is USDA loans they're gone right now. They're completely closed. None of the offices are open. And the problem with USDA is it actually has to go, once the lender is done with your loan, the lender has to send it to, in Florida, Gainesville. And Gainesville double checks everything, makes sure it meets all the USDA criteria, and basically gives us the stamp of approval.
Okay.
That's when you can close on a USDA loan. That office is completely closed until the government reopens. So
the office in Gainesville covers the entire state, or?
It does.
Interesting. Okay.
And so what's going to happen too, what I'm warning everybody about too, is once they do reconvene, there's going to be a backlog of USDA buyers. So it could take you much longer than before the shutdown. It was taking 2 to 4 days to approve it. So pretty quick. Like USDA has been the quickest I've seen in years. Like there was a few years ago, USDA was taking over 30 days to approve loans. They were so backlogged. It was like, oh my God, how are we going to keep a contract together 60 days, you know, to try to,
it was like 10 days.
Yeah. So they were down to 2 or 3 days. The last one I did, that was before the shutdown. So we don't know what's going to happen, obviously, after the shutdown, but my guess is it's going to take at least 2 or 3, maybe even a month, you know, 2 or 3 weeks, maybe a month to get through the backlog and to get caught up. So hopefully they can get back to work soon, because we, you know, this area in Central Florida, there are quite a few areas that are USDA eligible, and it's a zero down loan. So for a lot of first time buyers, they really like the program.
So I'm curious with, so I'm wondering where the cutoff point is. If somebody was right in the middle of a USDA loan financing purchase,
they're done.
Even if they got the approval already?
If they have USDA approval,
yes,
they're fine. Okay. They can close because they probably already would have closed. So once you get USDA approval, your lender's doing the clear to close, doing the package, getting with title, you're done. It's, you know, that's in within the next couple of days, we're closing.
Gotcha.
So if USDA has approved it, you're fine.
Gotcha.
Nothing's going to happen. You're going to close. You would probably already have been closed.
So all those already are probably already closed out.
Correct. So your lender might be about to have issued a clear to close for you. And with this government shutdown, you could be on complete hold right now if you were. So you got to switch programs or try to hold the contract together and ride it out.
Gotcha. So if you're in the middle of a USDA financing right now, Kevin's advice is to change financing or extend it. One of the two, right?
Depends on the seller. You know,
can you extend the lock?
If you're changing programs, a lot of times you have to do a whole new lock because you're doing a new program. So
what if they want to just remain in the program?
Oh yeah, if you're staying USDA, if the seller is okay extending your contract, you can extend the lock with you, or you want to do it before your lock expires. So yeah, you can extend.
Okay, so let's stop. So that's USDA. So now we got VA and FHA. How are they being affected at all?
At this time, no. Keyword at this time.
Okay.
Even FHA was, they weren't doing the tax transcripts for a little bit there, but they went back to work in that part of IRS about 7 days ago. You still can't call anyone at the IRS. They're not going to send you your tax refund. So there's other problems because a lot of first-time buyers now in this part of the year, they rely on their tax refund to buy a home. So they could be affected in the near future, because until this shutdown stops, they flat out said they'll process the returns, but they're not sending people money. So if you're depending on that, you know, what I'm recommending to people is, if they were looking for their tax refund to close, is to let's talk about getting a gift from a family member, and then you can, you know, worry about that later, or borrow from a 401k or an IRA or some type of investment vehicle that you may have. So there's other ways to still close, but FHA and VA have not been affected as of yet. We're business as usual. I'm just worried about if it keeps going and they need the tax refund, that they might not buy till summer versus spring, depending on how long the IRS takes to.
And as you're saying that, I'm hearing a collective sigh of relief from all throughout the Central Florida area, because a lot of people weren't sure what was going to happen with FHA and VA financing as we were approaching the government shutdown. Now
I was nervous too, to be honest with you. I wasn't exactly sure, because you don't know what departments they're going to shut down. I've been through this before and it wasn't that bad, but you never know. Different people in office, whatever. I didn't know exactly what to expect. So it was nice. Corporate sent us like a detailed, like, here's what's affected, here's what's not. And that helped me go, okay, this isn't going to be so bad. And then that's why I posted the USDA thing the other day for real estate agents to know that it is a problem. And if you have a buyer that you've been working with that was pre-approved using that program, you probably need to go back and sit with that lender, sit with the buyer and figure out alternatives, or wait till the shutdown hopefully is lifted soon.
Yeah, if you don't know this already, if you follow Kevin's page, he regularly often puts on very useful, helpful information as far as what's taking place in the mortgage industry. So if you get the opportunity, follow him and keep an eye on what's going on in our industry. It keeps you well educated.
I think your dad had a question.
I think he was thanking you, basically.
Oh, okay.
Yeah, you helped him out.
You're welcome, Angel.
VA financing, and I know he's definitely appreciative of the hard work that you put into that. So, and thank you very much for taking care of him as well. And with that being said, anybody who, like in his case, he talked with a previous financial institution first, and he wasn't getting anywhere. Ended up talking to you, and he was able to make the deal happen. So in those cases, when you talk to somebody, one of the first things that you're looking to do is qualify them, right?
Correct.
All right. We've talked about this many times before. There are differences or different levels of commitments, qualifications, that kind of thing. You want to touch on that a little bit?
Yes.
Okay.
This is really important. Central Florida, and this goes for real estate agents, this goes for buyers, this goes for sellers if you're accepting an offer. Mm-hmm. The first level of loan approval is called a pre-qualification. It's about as good as toilet paper. It's a waste of time.
So that's the lower level.
That is basically you fill out an online application. I've pulled your credit, but I have not verified anything. Okay. I would never do that to anyone. I would never put someone in your car or anyone else's car without knowing asking all the right questions and verifying the documents. So, because just a simple example, you could be a truck driver. Mm-hmm. You make $50,000 a year. You have good credit. You fill out the online application. So an online lender says, go buy a house for $250,000. The problem is you just changed from a salary truck driver to a truck driver 3 months ago by the route. Mm-hmm. So every week your paycheck is different. Mm-hmm. The lender's not going to be okay with that. They're going to need to see more time at the job to be able to average your income. Yeah. So just because you have a great job, but how you get paid affects how we look at the loan and how we analyze your income. So without knowing all the facts, without seeing your W-2s, without seeing your pay stubs, there could be things, maybe you forgot to add child support on the application that you're paying. Well, when I get your pay stub and find out you're paying $700 to your ex-wife for the children, that could affect your debt to income dramatically and affect how much you're able to buy. So there's so many things that you don't know if you're just doing the basic pre-qual. You're setting yourself up for failure, frustration, and you could lose your escrow money, your appraisal money, your inspection money, and be frustrated. And there's no reason for that.
So why would somebody issue a pre-qualification letter then?
Because they're lazy.
That's the answer I was looking for.
They don't want to do the work. They want you to go find a house, and then all of a sudden they'll start working on your loan when you're under contract.
Yeah.
That's just lazy.
Yeah. Okay.
Bottom line.
That's a fair answer. That's a good answer.
The next step is pre-qualification. And this is the bare minimum that every single person that is buying a house, or if you're accepting offers on a house, you need this on everyone.
Pre-qualification, then pre-approval, right? Is that what you're saying?
Yeah, pre-qual, pre-approval, and then loan commitment. Yeah. So a pre-approval means I've actually verified all the documents. So everything you told me on your application, I've checked it off and verified it that it's actually true. And sometimes I've even taken that document and sent it to underwriting to get them to review the numbers to make sure, because if there's something that's weird or different or unique, I'm going to send it right to my underwriter. And sometimes, in a couple hours, I have an underwriter telling me what I can do and not do. And then I can put that in the file. So when it goes back to underwriting later, we're set.
Gotcha.
So double checking, like we talked about earlier, I don't know everything. I double check everything.
Right.
So a pre-approval is really good. I mean, your lender's going to know most, there's going to be very few things that can probably go wrong. There still can be a few things, but what I like to do is loan commitment. And a loan commitment is when your lender has actually underwritten your file. So they've taken your tax returns, your bank statements, your, everything about you, and they've sent it to the underwriter, and the underwriter has reviewed you. Mm-hmm. So now you're approved. You're approved up to a certain max amount, and then all you have to do is go find your house. Once you find your house, we just got to make sure to appraise, inspect's okay, you're happy with inspections. And then I just update a few documents like bank statements and pay stubs.
Okay.
So it's a lot easier process because you're not sitting there 30 days going, is my loan approved? Is my loan approved? That's stressful.
Mm-hmm.
So I tell people, look, why don't we just take the stress out up front? It takes you a couple days. Let's just do this the right way. And then when you find a house, it's more like, okay, we just got to make sure to appraise. So there's still a few hurdles we got to make sure,
It's just like almost like having cash in hand, right?
It's the next best thing.
Right.
And a lot of times these offers are higher than cash. So it's actually, for a seller, it's actually better than cash because you can still close in 21 days or less with us. We have a 21-day guarantee for the sellers, but you're usually getting a higher price offer than someone that's trying to just get a steal and either buy it as an investment or flip it or whatever they're going to do with the property. So I highly recommend it. Even if it's not with Fairway, find a local lender that's going to do the work up front for you. Highly recommend it. Your life will be easier. You'll thank me. And when you get to closing, it will be truly a fun experience versus I'm just glad this is over. And it should never feel like that.
So as a buyer, if you're you're out looking at properties, and then say if you only have a pre-qualification letter at this time, you come across a property, you fall in love with it. You learn that you're about to submit an offer, and suddenly you're in a competing situation. You got more than one person who fell in love with the property as well. What do you recommend in order to make your offer strong so that they can get a leg up over some of the other offers other than just a purchase price? And I'm asking it this way because I know the level of loan commitment plays
makes a huge difference.
Exactly. Yeah.
And here's honest answer. That loan commitment isn't even really for you. It gives you peace of mind if you're a buyer, but and your real estate agent peace of mind that your loan's going to get done. It's for the seller. It's for the seller to choose your offer because they know. Because the seller cares about one thing and one thing only: closing on time and getting what they expect to get out of their house. Mm-hmm. They want that money to move on with their life, to buy another house, to downsize, upsize, relocate. They might have a million reasons why they need their money. It could be a divorce situation. It could be a lot of things. But if they don't get their money, then their life is all jacked up and they get stressed. And that's where some of the problems come. People are highly stressed when they're buying and selling. So if they see that your offer has already been approved by underwriting, all they have to do is make sure that their house appraises. So it's kind of on them, right? If their value, their contract price is legitimate, mm-hmm. and it appraises, then we're going to have no issues going to closing, and they know that, so they can feel comfortable. So if there's 4 offers on the table and yours might even be 1,000 or 2,000 under, but you have loan commitment and you have a 21-day guarantee that pays the seller $200 a day if I don't close on time, mm-hmm. psychologically it puts them at ease. So even if that seller wants to do a 45-day close, that 21-day guarantee made them go, this lender's putting his money where his mouth is. So it's going to put you to the top. I talked to a lot of people, and a lot of agents are actually calling the listing agent and finding out what's important to the seller.
There you go.
And they set up their offers based on what the seller wants. So if the seller needs like a lease holdback for a week, or a little longer time to stay in the home, or a longer contract time because they're trying to search for a home too, these are things you can offer them to make them feel that you're giving them what they want.
That should be step one of any negotiation. Find out what's important to the other party.
And always have the lender call too. Call the listing agent, introduce yourself, say hi, let them know, hey, the loan's already been approved. If you accept our buyer's offer, it's already been done. And nice. It makes them feel really good. Because a lot of times, if you're in 5 offers on a situation as an agent, how do you decipher all this? I mean, it's a lot of work, right? As a listing agent to be able to present all these options to your seller. So I try to make it as easy as I can so they can see the power of what we've done and the way we've done it. And I guess I don't personally do this, but I've heard of some agents write heartfelt letters.
Yeah.
Yeah. And I know sometimes it works perfect.
Sometimes it works, sometimes,
It depends on the seller.
It never hurts. I hope it never hurts.
What do you like to do, Dan, as a buyer's agent? What do you like to put on the offers that helps your offers? Well, you touched on it already.
Step one of any negotiation should be to always find out what's important to the seller. And I can say with my experience on both sides of it, seller and buyer side, where we have won the bid, or on this, if I was on the seller side, we have accepted a bid that was actually lower in price than a competing one because of the other terms of the offer, whether it had to do with the strength of the financing, whether it had to do with some of the terms, if they were adding in ridiculous or over extenuous contingencies, or not wanting to move for too long of a period of time or wanting to move too quick. It can be any number of reasons. So yeah, finding out what's important to the other side, trying to structure your offer so it's as friendly to the seller as it possibly can be, and don't necessarily be afraid if an offer is coming in that's a higher price. You can still strengthen your offer in many other ways as well.
Yeah, it's the whole picture.
Yeah.
It's not just price.
Right.
I mean, price is important, obviously, because it affects what they're going to net, but that isn't the deciding factor all the time, like you just said.
We won a bid one time. I was on the buyer side. The competing bid was $10,000 above what ours was. And
wow.
We still, I didn't expect we were going to win that one, but we did.
Did you play the lottery the next day?
It had to do with the strength of the offer. This is during a time when the rates were just going up, but the values were going up super, super fast, too fast. And, even though people were getting offers at a certain price, it wasn't necessarily appraising. And the strength, just as quickly as houses were selling, many buyers were not getting the financing approved that they, for the terms of the contract as they originally wrote it, because
if it doesn't appraise, most buyers don't have extra money laying around to pay over appraised value. Some do. Mm-hmm. And sometimes it makes sense. If it's just a couple grand, sometimes you'll see buyers do it, but there's times when people are pushing the market, especially in the past, and there's just no comps to support it. So they're going to have to come back down anyway. So having those multiple offers and over list price,
yep,
they still netted what they would have netted by just selling it at the list price.
Richard Henry came on board. Thanks, Richard, for joining us. I really appreciate that. So again, we talked about VA, FHA. Not going to conventional too much yet, but
conventional.
What are some of the pros and cons? Like say you're talking to a buyer and first time home buyer, he qualifies for FHA financing. Sometimes he might make the decision to go with a conventional product. What are some reasons why that might take place?
Well, FHA does require, if you're not putting 10% down and most people don't, if you're using FHA, you're probably going to put 3.5% down, mm-hmm, which is the minimum required. That's why you're going to do it. The reason you go conventional is if you're going to be in the home a long time, and that because the mortgage insurance stays on an FHA loan for life now if you don't put 10% down. So you could be paying
2-3 years now?
4 or 5 now.
Oh my gosh.
I looked in it. When we bought our house, it changed 6 months after that. So
really?
That's about 5 years ago.
So you probably dropped yours by now, I'm sure.
No, I got to wait 1 more year, they said, or something. I don't know. They gave me the runaround.
Right.
Yeah, that's a different story. But yes, I can get it off. So I just got to jump through a few hoops.
Sure, yeah.
So FHA is beautiful, but the mortgage insurance, and this is an extra insurance that protects the investor, mm-hmm, the lender. It's an insurance policy where if they ever have to foreclose on you, they are going to be made whole. So even if the properties drop like they did in 2008 and 9 and beginning of 2010, the banks could sell the house at a loss and sue this insurance policy or make a claim against it, and they were made whole. They didn't lose any money on the deal. So it's not an insurance that protects the buyers, but it does protect you because the banks can issue these loans without requiring much more substantial down payments. Mm-hmm. So it does protect you in a way. It allows you to get into homes with a lot less money down. Mm-hmm. So if you're going to be in the house a long time, and your credit's really good, the mortgage insurance on a conventional loan is really all it's based on is credit score and loan to value. So if you have really good credit, your mortgage insurance might be $50 a month on a conventional. It might be $140 on an FHA.
Yeah. Now
the inverse is true too. If you have a lower credit score, your MI on a conventional could be $200 or $300. And your FHA is only at $125 because the FHA is the same for everybody. The mortgage insurance rate is the same for Dan, for Kevin, for you. It doesn't matter about credit score or anything like that. It's across the board.
Okay.
So sometimes on the lower credit scores, it's much easier to go FHA. And FHA allows for a higher debt to income ratio than a conventional loan. So a lot of first-time buyers that are trying to push their approval amount to the max, FHA may give you a little more purchasing power.
Okay.
So it depends on the situation. That's why I tell everyone there's no perfect loan.
It comes down to the individual, what works best for you. And that's where talking with a well-qualified, well-experienced mortgage broker could go a long way, because he'll give you all the pros and cons on it.
It's worth the free consultation. It's worth every penny.
It doesn't take very long, right? How long is your meeting typically?
I mean, the first call is usually just 10 to 15 minutes.
Okay.
It's a quick get to know you, find out what you're trying to accomplish, your goals, your dreams, your needs, what you think you want to do. And then we do a quick application, get that going, and then I start the whole review process, and then I request the document. So if the client's quick, the whole process can be a day or two, unless we do the full underwriting. If we do the full underwriting, we do have to disclose, we have to send it into processing. I mean, it's probably 5 days on a quick client. So it's still fast. So what I like to do is get the pre-approval, send it out, allow you to start window shopping at homes. I mean, not window shopping, but you can actually shop.
Sure.
Get out there and see what's out there in the market. By the time you actually find a house you like, usually that first few days, you're going to have a loan commitment letter that will replace the pre-approval letter and make your offers look much stronger. So that's what I usually like to do. Not all clients do it. Some clients are like, nah, I'll finish getting you everything, because, they give me most of it, but to do the underwriting, I need like the little details. Right. Oh, this a large deposit here. Oh, hey, I need this. Like little things, letters, explanations, things you don't need on a pre-approval. But when you're going in for underwriting, you need all those little things too that allow you to go through underwriting the first time and be approved. So that's where the differences come in, and I highly recommend it. Again, even if you don't use Fairway, find a lender that's going to do this for you, because they're going to go the extra mile for you, and you're going to know, and you're going to have more leveraging power. So, I mean, there's nothing bad that can happen. I tell everyone there's nothing wrong. There's no got yous or strings attached. I mean, literally, it makes the whole process go smoother. But it costs the banks, and this is why a lot of lenders don't do this. It actually costs us money. We don't charge the buyers to do it, and we have to pay our underwriters, our processors, our loan assistants. We have to actually incur cost to someone that might not even use us in the future. There's no guarantee. We're not locking them in. We're not charging them money to do this. So we're going to do it because it's what's right, and we hope to earn their business. But a lot of banks don't want to incur the cost. So they're lazy, and they want to wait until after the contract's done.
Lazy and cheap is what you're saying.
Call a spade a spade.
There you go. Hey, Christy, thank you for coming on board. I definitely appreciate that. So I'm getting older. You're getting older.
What, there's the grays? All the grays? Is that what gave it away?
We all keep getting older, but some people are getting older. Their families are getting larger. So they might be looking for a larger house. They're what we call move-up buyer. You want to touch on that a little bit? You mentioned something about loan recasting. That's a term I'm not familiar with. You can educate me.
It's a beautiful feature that a lot of loan officers, a lot of real estate agents, and a lot of buyers have no clue what this is. This is really important if you're buying another house and trying to debate, what do I do? Especially if you're selling and buying. I've done a lot of them this year where that was the question, is the real estate agent referred it over. They don't know if they should rent it, sell it. Can they afford both mortgages? How can we get them in? Because they want to buy now and sell later. Mm-hmm. So a recast option is an option on a conventional loan where, let's say you want to buy a $400,000 house now, you're selling your $250,000 house. So but you don't want to put it on the market with Dan until after you close on the new one. So now you do have to qualify for the debt with both mortgages. So this will work if you make good money. Sure. But if you're living above your means, it might not work. Mm-hmm. But for the clients that I see that, that have good money, they're not in the debt up to their eyeballs, it's beautiful. So we do a low down program. So this client wanted to put 25-30% down, but it's all tied up in the walls of their home. Mm-hmm. So what we did is we did a 5% down loan. So they had mortgage insurance for the first few payments. Okay. They moved in, got their house ready, moved in, they got their house ready to list. The listing agent sold it. Then they took that equity and they went to the servicer and they did a recast. So it's like a modification on your loan, but not a modification like we remember from 2010 when it was a negative modification, like people were modifying because they were out of jobs or their properties had come down in value. It's a modification because you're making a huge principal payment. Mm-hmm. So if you just send that money into the lender, it's not going to drop your payment. You're going to be out of debt faster, but it's not recasting the loan. With the recast, you're actually going in there and saying, okay, I'm taking that other 15% that I wanted to give you when I took out the loan. I'm going to give it to you now. They drop the mortgage insurance, they drop your principal and interest, and they reamortize the loan based on your new principal balance.
I like that, because many times when you get the mortgage insurance up front, you have to wait at least a year, right, before you're allowed to drop it off.
Yep, if not longer sometimes.
So in this case, what you're telling me is that you don't have to worry about doing that.
Nope, it can be done right away. By the time you make your first or second payment, it depends on how quickly your house sells. Of course, that's a variable, right? It could take a week, or if you're in a really high price point or on the beach or something, then it could take a while. Who knows? Every area is different, but once that happens, your loan is going to go back to right where you want it. So I probably did about 6 or 7 of those last year, and the clients didn't even know it existed. The agents that I worked with didn't know it existed. So it's on every conventional loan. It's just a feature of it.
Okay.
But a lot of people don't know it even exists.
Off the top of your head, does it change the debt to income ratios when you go with that feature, or is it going to be the same ratio as if you were just doing the conventional product straight?
Well, they already closed you, so they don't care about your debt ratio when you're recasting it.
Okay. You're
just sending it, and it's on. There's a cost. There's about $250 to $300 processing fee at each servicer. So every servicer is a little different, but you can do this more than one time. Usually they have a minimum of 10 or 15 grand. So each servicer is different. So I'm not going to speak universally. You'll have to call your servicer if you wanted to do this, but you have to have a conventional loan. You call your servicer up. That's the person you pay your money to. You call them up and say, hey, I'm thinking about recasting my loan. What is the procedure? So usually it's about $250 to $300, a one-time fee, and then they go through their paperwork and their department, and they reamortize your loan, and then your new bill will come out, usually within 30 days, sometimes 45 or so, at the new lower amount. And you can do it. I've seen some servicers, 10 grand. So if you come into a little bit of money, you get a bonus at work, and you want to send it towards the principal of your mortgage, sometimes this is better because your payment drops. If you're just sending it towards principal, you're going to be out of debt faster. You're canceling debt, but your payment doesn't drop when you make principal reductions. So it's pretty cool.
That's pretty cool. Valuable information from Kevin Bordreaux here. Definitely something we got to look more into. So what would you consider to be some of your strengths in this industry then?
Seeing outside the box.
Because, unfortunately, realtors, you get into this business and immediately, day one, I guarantee you'll go into meet about, 5 or more mortgage brokers. And
probably every week.
Some are bold enough to tell you they're the best in the industry. Bar none.
I've never used that line.
I'll see. So
there's always someone better than you.
But what are your strengths? What sets you apart from other mortgage brokers and other lending professionals?
I would say the ability to think outside the box and to solve problems when they come up, and create solutions. And then good communication between all parties throughout the whole transaction. That's huge. If a lot of lenders are notorious for not calling their clients, not calling the real estate agents, not even calling the listing agent until there's a problem. My thing is, I want to talk to you from day one. I want everyone to know we're a team and we're going to get this done together. So if there is a problem, like a low appraisal, inspection that needs a repair, we're in this together instead of, I haven't heard from you, Kevin, in 30 days. We're supposed to close in a week, and now you're telling me there's a problem. That never goes over well.
Nope.
But that's how, and I can't say all lenders, of course not. There's a million great lenders out there,
sure.
But there's a lot of really bad ones, a lot of ones that don't know what they're doing and they don't communicate well. And I would say be able to solve problems, be able to make sure everyone comes at it from a team approach, and just seeing mortgages differently. Not being an order taker. I'm not just going to say, here's what you get. I'm going to look what's best for you. So that's kind of where my financial planning background, in between speech pathology and mortgages, I did financial planning for a couple of years. So I got my securities license, my insurance license, my mortgage license, and I help families, create financial plans. That training has helped me, I think, excel in the mortgage business because I understand how money works, debt works, securities work. I know how it all interconnects. So I can see things that sometimes other people might not be able to see just because of my background.
Okay.
So it all panned out. So my master's degree was not a waste. My financial planning time, a little bit of doing that was not a waste.
Degree ever wasted, really? I guess maybe some of them are. I don't know.
I mean, I kind of thought that though. When I did make the change, I'm like, why did I go through all this schooling? Oh man, I could have been doing this at 18, but I wasn't ready to do what I do now at 18 or 22 or even 24. If you would have told me, Dan, when I was 26 years old, that I would be in mortgages or in sales, I would have laughed at you.
Oh yeah.
I was scared of my own shadow, as far as not as friends or whatever. I was very outgoing, but like sales, to call someone and try to sell them something was, or it was just so weird. When I was in financial planning, it was so hard. It was really hard, but all that, change, working on those skills, working on the things you're not very good at. So I love sales now because I look at it more, it's not even sales. I'm an advisor. I'm just here to advise. You choose what you want to do. Just here to help. The math is math and numbers are numbers, but let me at least get you to think outside the box and explore some other options and make the best decision for you and your family, because Dan's not making your mortgage payment. Kevin's not making your mortgage payment. You are. So we want you to pick the best one that meets your needs, not only today, but 5 years from now, 7 years from now. What is going to be best for your family?
Okay, outstanding. I appreciate that. Thanks for giving everybody some really good, valuable information today. What would you like to be the main takeaway for anybody watching?
Never accept an offer that's just a pre-qual. If you're a buyer and your lender just does a pre-qual, please find another lender. Even if it's not me, find a lender that's going to do the work up front for you and advise you and hold your hand and guide you through this process so it can be fun and exciting and you can protect your money. You have a lot of money. I mean, a lot of people are putting $2, $3, $4 grand in escrow. You have inspections, you have appraisal costs. That's important money. That's money out of your pocket. That's money you could lose if your team doesn't do what they're supposed to do for you. So I always use the line, who you hire matters. I think a lot of people spend more time playing around online trying to learn something than spending time really picking the right real estate agent and mortgage person that is really going to run through a brick wall for them if needed. Like, I have no problem going over my underwriters, going to credit risk, fighting for my clients. And a lot of people don't know how to fight those fights, in this industry.
You have to know what questions to ask, right?
Yeah. So I think if more people just took a little more time finding the right real estate agent and the right loan officer, it really would be fun. And it would be a less stressful.
It's better to go with somebody you know, like, and trust rather than just some stranger you meet online anyway, right?
And there's nothing with meeting them online per se, but you want to interview them. You want to meet them. Don't just take the first person you cold called on because you saw their listing or something. Like, get to know them. Find out how much they produce. How long have they been in the business? How do ask questions? Find out. Because some of these people that do a lot of business too, some of them are amazing, but some of them are also so busy, they may not have time for you too. So that's something to consider is, does your realtor have the time to serve you? Are they going to be able to help you right now? I know you always do that, but some agents, I can't show you a house for a week or whatever because they're too busy. And that can affect you getting your house. So there's a lot of factors, but take a little bit of time. Get some recommendations from other people that that had a great experience. Check them out. Check us out online. See our reviews. Make sure that we are who we say we are and that we can help people. I think online reviews are great. It shows you, okay, they got a lot of other happy people. That's at least a good sign to start the relationship and to see if we're the right fit.
Oh, very good. Well, Kevin's been doing this for quite a while. I've known him for a number of years. He's not just a very accomplished mortgage professional, but he's also a teacher. He likes to basically give insight into what the process is all about. He also does a similar show like this one. It's called Coffee with Kevin.
Yeah,
he's been doing it longer than I have. Probably does it better than I do. But he's a mortgage broker in the business. I'm a real estate broker in the business, so it's okay that we can kind of run together on that, right?
Yeah, you were one of my awesome guests on Coffee with Kevin.
I really appreciated that. It was awesome. And so if somebody wants to get in touch with you, if they want to talk with you about getting a loan product for themselves, or if they're a realtor in the business and they want to talk about referral opportunities, what's the best way to reach you?
My cell phone.
Okay.
Text, call, carrier pigeon, or whatever, however you can Facebook me.
Okay.
But my number is 407-718-5588. That's 407-718-5588. Call me anytime, weekends, nights. My cell phone's always with me, and I'm here to help you in any way I can. And sometimes that's just getting a second opinion, or whatever. I mean, I'm just here to help. The more people I help, the more that I know that it's all going to work out, right? The more people we just do the right thing for, advise them, because there's times when, for whatever reason, doing something right now is not in their best option, but they're going to leave me at least having a plan to accomplish what they want in the future.
Beautiful.
They're not just going to be turned down. So, sometimes the answer is just not right now, but here's some things you can do to change that. And you can be a homeowner and achieve the American dream. We all want that, right? There was a study that the Federal Reserve did that the average homeowner, and I could be misquoting it a little bit, so I apologize, but 52 times roughly the net worth of the average renter.
Let's fact check that. No, I'm kidding.
Actually, we could probably do that in 2 seconds with our smartphones. But it was over 50. It
Wow.
blew my mind, because I was like, well, okay, maybe 5 times 10. It was 50 or 80. It was a ridiculous number. So I'm using 50 to be
Sure.
on the conservative side. But
Right.
you can build wealth through real estate.
Absolutely. All right. Well, before we sign off, I just want to say thank you to Errol Castro for coming on board. He was probably watching while he was showing the house. He was heading out there to show a property real quick. David Lynn and my lovely wife, Tina.
Tina. Right.
But thank you, everybody, for joining us. And we'll be on again next week. Same time, same bat channel. Friday, 12:15 p.m. Thank you, Kevin, for coming on board. I really appreciate it. All right, bud.
Thank you, Dan.
All right. Have a good one. Happy Friday, everybody.
Bye, everybody. Have a great weekend.